And that's it, folks. We have a new heavyweight champion of the world. I'm sorry, what? Wait, what the hell is this? It's Wednesday, folks, which means it's another episode of the Stock Market Showdown. This week, it's the cruise lines. Let's match them up and find out who's the best of the worst. Let's get ready to rumble! What's going on, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I believe you can own it through this channel. Just recently, we've started a new segment on this channel called the Stock Market Showdown, where we pin two stocks against each other and see which one comes out on top. This week, we're looking at the cruises and seeing which one of these beaten down stocks has what it takes to claim the championship belt. In this corner, with a market cap of $5 billion and a revenue of $6.46 billion last year, and currently no plans to sail anytime soon. All the way from Miami, Florida, the Norsk from the south, Norwegian Cruise Line. And in this corner, a proven company with a market cap of over $12 billion and nearly $21 billion in revenue last year. Also, no real plans of making any money in 2020. And also from Miami, Florida, the heavyweight champion of the world, Carnival Cruise Line. Oh my God, what a painful intro. I literally couldn't find anything good about these two to hype them up, folks. That being said, please give this a like for that, and let's get this match started. Okay, so Norwegian Cruise Line comes in as the third largest player in the cruise line industry with a market cap exceeding $5 billion. Norwegian's biggest advantage right now is the size and capacity of its cruise fleet. With a smaller fleet of relatively newer ships and no new vessels scheduled to launch for the next 2 years, Norwegian is set up to weather the stormy seas ahead of it. Look at American Airlines, for example, and the amount of cash they have to burn through every day because they have the largest airline fleet in the world. It costs money to even just store these things, and that's where Norwegian has the upper hand here. But look, here comes Carnival boasting its large market cap and major fleet, and the kicker here is that they were able to get proper funding back in May. But that could spell trouble, as most of it can be diluted into shares, and it could crush its recent 25% run with a massive share dump. Carnival actually announced that it was making available $3 billion in senior secured notes to be due in 2023. In addition, the company also revealed plans to raise $1.75 billion through a sale of senior convertible notes, which again turn into shares that get dumped on you, also due in 2023. In its simultaneous third debt announcement, Carnival also unveiled a public offering of $1.25 billion worth of common stock shares, and it looks like by these numbers that Carnival Cruise Line's debt has nearly doubled the size of their market cap. Man, that is absolutely insane. I don't know why people see so much value in Carnival, but that is just mind-blowing. This is really starting to look like a David versus Goliath matchup here, and I think we all know how that ended. Not sure what the rest of the matchup is going to look like here, but it's starting to appear as if Norwegian may be taking the lead on this so far. Okay, round one is over, and it appears size doesn't always matter unless it's a giant pile of debt. That being said, it looks as if Norwegian has taken round one. And before we get to round two, though, I'd like to take this intermission to invite you over to the Chaos Crew. By clicking the join button, you can get some pretty cool looking badges next to your name that signifies you're part of the crew, and you will be also receiving a daily watch list from me an hour before the market opens every single day. It's just another way for me to say thanks for supporting this channel, and in return, you get a little something for me as well. If that sounds like something you might be interested in, again, click the join button, and I would love to see you there. All right, so let's get on to round two. Looking at the cost per share of these two stocks, they are neck and neck. With Norwegian, whose ticker symbol is NCLH, has a current price of $19.64, and Carnival, who has a ticker symbol of CCL, comes in at $19.21, so no real advantage here to speak of. But again, here's where Norwegian may take the upper hand in this round as well. and it's about their relative discount and high potential upside when you consider they have far less debt to convert into shares than Carnival does. Now, Norwegian has suspended sailings through the end of September as of yesterday, which was really terrible, and even though this will badly impact the bottom line, the company has also improved its liquidity position. Its subsidiary company NCL announced last month the closing of two investment tranches, one for $400 million and the other one for $675 million, which will help them moving forward. Carnival also has no idea when they will start up again either, so it's looking more and more apparent that when these next round of earnings appear, it's going to get really ugly. Norwegian, though, has a sound cash position, and relative share price is what makes Norwegian more attractive. It's going to take a while before either of these stocks really come back, but looks as if Norwegian may get there faster. Norwegian is really looking to take this one, folks, and the KO may be coming here. Along with its insane debt load, Carnival also suspended its 50-cent per share quarterly dividend in order to try and keep some cash on hand. This is a serious blow to the stock, as a dividend at current prices would yield over 10%. Oh, and down goes Carnival, folks. It wasn't even a fight, as Norwegian comes up with a nasty pile driver to take down the champ. And that's it, folks. We have a new heavyweight champion of the world. I'm sorry, what? Wait. What the hell is this? It can't be. The Royal is here, and it looks like it wants to rob Norwegian of the belt. What's happening right now? Let's take a look if Royal Caribbean actually has what it takes to steal it from the Norsk. Royal Caribbean has a market cap of $12.3 billion and brought in over $11 billion in revenue last year, more than anyone. The management that runs Royal Caribbean is touted to be the best in class, which is super important in times this industry is facing right now. Ticker symbol RCL is currently trading at $58.75 a share, and while more expensive than Carnival and Norwegian, this is still sitting at a steep discount considering where it was above $130 a share. Man, Royal Caribbean barged in here and started delivering power slams to the Norwegian right now. Let's see if they can hold up to the Royal. Recently, China has been opening up and loosening restrictions, and Royal Caribbean's ticket prices have actually been holding up better than the other two companies. This is an important point, as cruise lines are looking at reopening with limited capacity, whenever it may be, and maintaining ticket prices will be essential to maintaining margins. However, RCL extended its suspension of sailings to the end of July, and quarter two earnings forecast predicts a net loss of $4.43 per share, nearly tripling the net loss reported in quarter one. But here's the move that could do it for Norwegian, folks. Remember their efforts to create liquidity from NCL, which set it apart from Carnival? Royal Caribbean's liquidity position isn't as much of a concern here, as long as its relative share outperformance and valuation is worth the advantage. And so that's what will deliver the suplex to do the Norsk from the south in, people. What a match. Norwegian comes in as the underdog to Carnival Cruise Lines and absolutely crushes it in this David versus Goliath matchup, only to have Royal Caribbean come in and step all over its hopes and dreams and claim victory over the World Championship belt. Okay, guys, but in all seriousness, take this matchup with a grain of salt here. This is something that I do for fun every week, and I do think that of the three, that Royal Caribbean is the better company here overall. They didn't have to take on nearly as much debt as the others, and Carnival is going to have to dump a literal boatload, pun intended, of shares on you as the investor. It's bad, folks, to have debt this high to the point that it's twice the size of its market cap, and it's downright disrespectful. And if they can't clear this off the books, they could face real danger of bankruptcy here. It's very comparable to that of American Airlines in the way that I explained that story. All that being said, this whole industry isn't moving anytime soon. With Norwegian continuing to push back dates as to when they will sail again, it's only a matter of time before the others follow suit. There's still over 40,000 people that are stuck out to sea during all of this. Over 80 days they've been trapped out there with no real timeline as to when they will come home. That's some scary stuff. So if you people want to invest in this sector, by all means, but in my opinion, there is so much more moving out there that is safer to invest in and will provide you with greater returns. As far as which ones to look at, well, take a look at this video right here where I go over the top 5 stocks that are under $10 and won't be there for long, or this video right here about the 5 stocks that have literally been recession proof. And as always, folks, I will see you all before the bell, and B. Smith is out.